Hello, I'm James, a fund manager at AJ Bell, and welcome to the latest quarterly review of the AJ Bell funds. In this video, I'll recap what happened across markets in the third quarter of 2023. Global stock and bond markets had a difficult return from summer as investors considered the consequences of interest rates remaining higher for longer. In the UK, expectations that the Bank of England would raise interest rates less than previously thought led to a decline in the value of the pound. The US dollar was generally strong against other major peers too. The falling pound led to an uplift in the value of overseas assets and shielded UK investors from much of the global market volatility. Though the global stock market benchmark declined 3.5% in local currency terms, it gained 0.6% when translated back into sterling. Bond markets rose 0.4% in sterling terms. This return masks what was a difficult quarter for longer-dated bonds, where a change in yield has a greater impact on capital value. Here the chart represents the return on longer-dated gilts that have over 15 years to maturity. Shorter-dated gilts performed well because their yields are more sensitive to changes in interest rate expectations. Inflation remains a watchword, although it's increasingly being offset by rising wages. Oil prices rose during the quarter, threatening the slowdown in inflation we've seen this year. In the US, fuel prices at the pump have a much more direct relationship with the oil price, so it's possible the gap between US and UK inflation will narrow further in the fourth quarter, should the oil price remain high. Turning to stock markets, the rise in oil price was beneficial for the energy sector. This in turn aided the UK stock market relative to peers because of its greater reliance on oil companies. Japanese equities remained in favour, while in the US the so-called Magnificent Seven gave a more varied set of returns. European stocks felt the weight of poor economic news from China, in part because luxury goods retailers are reliant on the Chinese consumer. Looking at performance of the AJ Bell funds over the medium term, relative to the IA sectors on a 5-year basis, the performance remains good. Each year, the investment team assesses the relative risk and return on offer across asset classes. The aim is to rework, if we need to, the AJ Bell fund's strategic asset allocation. That's the mix between shares, bonds, cash, and alternatives, such as property and infrastructure. This work is now underway and will set the course for the funds in 2024. And as mentioned in previous video updates, we're able to adjust fund positioning in the shorter term should we see a specific risk that can be navigated or opportunity to take advantage of. Thank you for watching.